start streaming. Alright, what's up everyone? It's Caddy with Money Investing. So hopefully this thing works out this time around. Let's try it again. So yeah, I had like too many programs running at the same time, which is why the live stream got cut off. So let me know if in the live chat if you guys can see the screen, if you guys can hear me without any issues. Rita, welcome. So we had quite a few people. We had like over, I think 400 people watching at one point, and then all of a sudden everybody dropped off because my screen was lagging a lot. Went back and actually watched the live stream, and yeah, it was awful. So sorry about that. I do apologize. And again, two things you always have to remember if you're kind of tuning in on my live stream is that the Wi-Fi and the power can go out any second, and it can be cut off, right? So so those are some challenges that we have to kind of work around, and hopefully, you know, when we're getting the inflation data, hopefully the power doesn't go out. All right, so Jason says the old link is still up. Yeah, I mean, I think it ended as a live stream and it actually get transported over as a video now. It's showing up as a video on my channel. But actually, I'll go ahead and post a new link for everybody on Discord, just so they have that available. Yeah, consider Twitch, YouTube live show is always a yeah. I'll see if I can do like something else, because I do have a wired connection for my computer with the Wi-Fi, but even then it's just I can either charge my computer or I can actually check out or I can power my computer, right? So it's either one of two things. I can either get the internet that I need through that Ethernet cable, or I can actually power my computer. All right, so I'm actually just gonna send this over to everybody over at our Discord. Just so everybody has this. All right, so we are live now. Good morning, good morning. So Nasdaq is down about 30 basis points right now, and we've got the S&P 500 basically flat, and we're down about 4 basis points, and the yields up about 68 basis points, back over 1.5. Good morning, welcome for joining in. I really hope that the stream runs smoothly. So once the data comes out and then they cut off as your stream. I swear to God, if that actually does happen, I will be so frustrated. But yeah, hopefully we just gotta get through the next hour. That's it, because 8:30 there's a lot of things coming out. So yeah, if we can get through 8:30 a.m. then Morning. So my brother is also on here. Shout out to him. Good morning. But yeah, so 30 minutes left for the CPI and the inflation data to come out. We already broke it down, but in case you didn't get a chance to be on that live stream, on the earlier one, I'm going to quickly go over that once again. So this is the analysis that we broke down. So the consensus estimate is 0.4% month-over-month increase. That's going to happen at a decelerating pace, and we're going to potentially be looking at 4.6%. That's the total CPI year over year. Currently, we're sitting at 4.2. That's going to be a 40 basis point increase. And when you exclude food and energy, so when you look at core CPI, month-over-month, close to 40 basis point increase as well. Also at a decelerating pace, coming in from less than about 1% from March to April to May. And when you look at year over year, we're currently sitting at 3%. That's expected to go up to 3.4. And these right here are the consensus ranges for total CPI and core CPI. And this right here was my complete analysis that I basically sent over to our Discord members. You guys can read that if you are part of our Discord. Zach says, I ain't scared of no CPI. Love it. Absolutely love it. Harry, thanks for joining in again. So good morning. What is your prediction? So I do think that CPI is going to be very in line with the expectations. It's certainly not going to be lower. If it's lower, then that would be huge for the markets. Like if it actually goes down from like 4.2%, let's say we come down to 4%, that would be a shocker for the markets. Like we've already read it from the federal beige book, and how all districts across the United States are basically mentioning that they are seeing, not all 12, but most of them. We broke down St. Louis, we broke down New York, we broke down Boston, and a few other. Minneapolis was another one, and a few other ones that are actually seeing that increase in raw material prices, input costs, and a lot of different things. So I'm expecting the inflation data to come in higher, so increase month over month, but again, do that at a decelerating pace, and we're going to start to crawl back down potentially in the future. All right, so if the QQQ dips, what is your support level? So we can actually do the analysis right now. So for the Nasdaq, there is a support at close to 330. That's going to be aligned with those moving averages. But if it drops all the way down to 316, then that would be, in most cases, a very strong buying opportunity. That would be a support that we kind of validated here. That's perfectly aligned at this 13,600 for the Nasdaq, right? That's the correlation. You'll notice that the Nasdaq has at 13,600, or close to 13,000, excuse me. That's the level to watch for the Nasdaq. And for the QQQ ETF, that is going to be at $330, $316. So yeah, that's going to be $316 per share. So, all right, when is the CPI going to be released? It's going to be released at 8:30 a.m. Eastern. So right now, in about 25 minutes exactly from right now, and I'll have everything up and running here. So the stream will have, just to show you guys what we're gonna do is we're gonna have Bloomberg running. So we'll have Bloomberg over here, and then we'll also have the actual report over here that I'll kind of refresh. And this is the previous month's report from May that was posted for the month of April, that we also broke down previously in one of our previous videos. So, so 25 minutes left, and we'll see how the markets react to it. Usually, when inflation comes in much higher, there's going to be more speculation of interest rates potentially going up, and to fight inflation so that we don't get inflation out of control, and that usually does affect growth in tech names also. All right, so let's take a look at, so the VIX is up about 6 basis points, trading back over 17.9, just under 18. And then I'm just listening in on Bloomberg a little bit. So CNBC says now ECB leaves rates unchanged. All right, so that's European Central Bank. Matrix, thanks for so much for sharing that. For some reason, CNBC did not show that on the live stream. Otherwise, I would have streamed it. But nonetheless, this right here is going to be the complete breakdown of the select sector indices. Right, we're seeing the yields push up higher pre-market, with financials, energy once again taking up, and tech is the sector that's down the most right now. So very, very interesting here. With XLK, that's going to be the technology ETF that's down about 46 basis points right now. So are we going to moon under 4.2%? Yeah, I mean, we could. If inflation comes in lower than expectations, and it actually comes down from 4.2%, then yeah, I mean, why not tech and growth basically rally, right? Because that could be transitory in nature, and that could push an interest rate hike even further out. Meaning that we don't have to basically increase rates. So what do you think about Clover Health? So Clover Health had a huge run up yesterday, but then a drop of 23%. Right now we're down about 3.6% pre-market. Again, short squeeze happened. I am not 100% sure about the real-time short interest for what this company has. So I think the last time I checked, this was like the second highest one at close to over 36 or 40%. But really the question is, how much lower is the short interest, right, from yesterday's squeeze or from a couple days ago? I mean, because like this was an explosive move coming in from like May 19th. We literally went up like 340%. Just coming in from like the last week of May, it's gone up so much. So it has a gap that it needs to fill. This right here is a huge gap that it kind of left up after the rally. So usually when stocks do leave these gaps, when they gap up or gap down, they usually come back down or go back up to fill these gaps, right? Perfect example is Intel. It did the same exact thing. It kind of went back down or went back up to fill those gaps. So And again, of course, I mean, if you're seeing a stock that's up like 300%, 400%, of course you're going to see some profit taking, right? I mean, that's just human nature right there. I mean, from like a few days ago, it ran up from $8 all the way to highs of 30. You'll see some profit taking, and of course, that's what we saw intraday with the massive red candle that we saw. Now, can this continue to push up higher? Absolutely, right? That's the real question: is how low is your short interest right now moving forward? So what implications do you think CPI would have on cryptos? That's a great question. For inflation, people are seeing cryptos, and more specifically, I'm going to speak about Bitcoin because that's, of course, the number one crypto out there. Have seen it either as a store of value or as a hedge against inflation. So far, so Adam will go over Coinbase in just a second. Just give me 5 minutes. But when we talk about cryptos, Bitcoin, people have seen it either as a store of value or a hedge against inflation, right? So far, the hedge against inflation piece hasn't worked out because inflation has gone up, and what's gone up with it is actually gold, right? Gold prices have actually rallied as opposed to Bitcoins. So I think it's more of a story related to store of value, and it's not an inflationary currency, so to speak, digital currency. So I think that's the real narrative here, is that it's a store of value which cannot be inflated in the future because there's a cap of 21 million. So inflation, I think, is going to be beneficial to cryptocurrencies, and more specifically currencies that have a cap to them because they can't be inflationary nature, right? So store of value, I think that's a better narrative in a play for Bitcoin moving forward. So the data is coming out at 8:30 a.m. and this right here actually has been the run up for gold of a little bit over 13.9, almost 14%. And you'll notice that actually happened in the beginning of April, so like the last week of March going into till now. And right now we are pulling back a little bit. So we'll see if we actually have any more room to the upside once inflation also comes down a little bit. So ECB continues bond buying. So Harry, thanks for letting us know. For some reason, I mean, CNBC is actually talking about cryptocurrency here.
Bitcoin, the national tender, right?
The ECB.
I think this is a fascinating time right now in the world. The technology has proven itself, and there's certainly no shortage of people who believe in it. I think there is a delicate balance here. We have an emerging technology that is incredibly empowering, and one that I think by and large can do a lot of good. But like all technologies, has downsides and consequences. But I would generally speaking just not advocate for a heavy hand of any kind of regulation on this, because at the end of the day, these are opportunities for us to seize, and hopefully as a country we can lean into the best parts of this and actually be a lot better off as a result, because other countries are absolutely leaning in a big way.
Would you, by the way, advocate for less regulation around Know Your Customer and ALM at the big banks?
No, I wouldn't.
No.
I think that is sort of the mainstay of what that banking structure provides. I think, there was a curious New York Times headline talking about Bitcoin recently. The very point that Bitcoin is actually in a public ledger actually means that it's fantastic for keeping tabs of a sort of digital paper trail, because by its own technology, Bitcoin actually keeps a public ledger of all those records and transactions. But I think certainly as we talk about banking structure, KYC is a really important role. The thing I will stress though too is if you look, all the studies I've seen have shown that cash, like cash money USD, is used for far more illegal transactions than cryptocurrency, probably in part for that very reason. Cash money can be rather untraceable for those illicit deeds.
I want to talk about your fund, but let me just follow up on that for just 1 second, which is
let's talk about Coinbase for just a second. So this stock has just been on a consistent sell-off, right? The one thing that we know from a fundamental standpoint is transaction revenue. Like the company makes majority of the revenue through transactions when people buy and sell cryptocurrencies. I think they also introduced Dogecoin. I could be wrong, but they also introduced Dogecoin as a listing on their platform so people can actually buy and sell. But don't quote me on that. I did read something very similar to that. But the pattern itself has just been selling off aggressively. The price to sales right now for this stock, I think it's less than 20 levels, and price to earnings is less than 50 for a company that's in the fintech space, competes with the likes of Square and PayPal. So statistics, this is the trailing 12-month price to earnings. So if you look at the forward PE, it's sitting at under 50. price to earnings multiple, and the price to sales is close to 16 levels. So I think the valuations come down like low enough for this stock to be considered and be added to your watch list, in my strong opinion. 47 billion for a company that's over 56 million users. Come on, I mean that's an incredible sell-off. Like from 425 all the way down here, that's almost a 48% discount that you're getting on Coinbase. So technically speaking, there's a strong support level for this stock at close to 217.50 levels. So we've kind of validated a couple times here recently. Look at the 4-hour chart. You'll notice that we were trading as low as 217 here, 218 before having a bounce higher. The one thing I would point out is that right now there's no clear trend reversal for Coinbase just yet, meaning that we're still trading below those moving averages. We're still making lower highs. So what we really need to see is a successful breakout over the moving averages, sitting at close to 234. And there's a lot of analysts that also have a price target on the stock of close to over 250 to 275, even as high as $300 per share. I think Kathy Wood also bought like 41 million shares yesterday of Coinbase. She's just been consistently buying and buying and buying of Coinbase, right? Time that actually comes out with inflation. Again, it's in about 15 minutes is when we actually get that. So I've got the QQQ, the Nasdaq, and the S&P over here. We'll get that immediate. Yeah, so she's got a lot of holding time here. Kathy Wood does, because she's just been buying a lot of stocks. Of course, as they come down, the rate of expected return actually goes up, but the holding time also increases, right? Because that's only that much difficult for stocks to regain and recontrol like 70, 80, 100% of what they lost and go back up. So Stefan asked, when do you think we'll resume full growth in tech bullish momentum? What inflation percentage are you looking for? So a gradual downward trend in the data over a set of period of months. Yeah, so that's a great question. So I'm actually expecting a decelerating pace for inflation data. So here, let me see. So I hope you guys can see the screen, and God damn it, this is so frustrating. Oh my God. What the heck is going on? Seriously, like what the heck is going on? It just says no data. I don't get it. It's just not receiving enough data from my internet. It's just, oh my God, this is so fucking frustrating here. No, you guys, it's probably lagging for everyone. I've never had any issues like these like in the past. This is just so frustrating. I don't get why the screen is so frozen here. I don't understand why the screen is yeah, it's an internet issue. I don't know why the screen's frozen. Because looking at the OBS Studio, it says it's delivering data without any issues, but my YouTube is just acting so weird. Audio but no video. Alright, let's see here. So I see an error over here that you're not receiving enough video to maintain smooth streaming, as such viewers will experience buffering. Dev says restart again. This will be my third restart in less than an hour. This is so frustrating. This is so frustrating with YouTube here. Alright, so we got about 9 minutes. I'll have to restart the stream, I guess. I'll see you guys in a couple minutes here. I'll restart the stream once again. It's fine now? Is it better? Is it coming up now? I'm just trying to see if my head's moving. Better now, okay. Okay, it's better. Just when I was about to restart. Okay, it's good. Alright, perfect. Thank God. I think this is what we're gonna spend most of our time doing, is just literally trying to figure out if the stream is working or not. And hardly talk about the markets. Alright. So hopefully we don't have any issues. Just wait and watch. 8:30 a.m. rolls around and we're gonna have that problem once again. Alright, so we were talking about Coinbase. I think 217.50 is a strong support level and an area of demand. I do think it's going to retest highs of $250 per share in the near term. Marcus, thank you so much for joining. All good now. Perfect. So that's good. All good. No need to restart here. So perfect. So we got about 7 minutes left for the inflation data to come out. And of course, we got to keep a close eye on the VIX and the broader markets. Let's take a look at some of the stocks here as well very quickly to get a good understanding on where everything is trading. So actually create like a 5-minute chart here. Alright, so we're gonna put Tesla over here down, 5-minute chart. We're up about 29 basis points, trading almost exactly at $600. And NEO is why is everybody saying no? No to what? So Adam says no. Rita says no. Greg is saying no. I'm reading the chat. Is it? I feel like it's super delayed. I feel like it's super delayed. I feel like you guys are hearing me way in the past. Do me a favor, just let me know what time you guys see down here. Here at the time zone. You know, what time do you guys see down here? Just let me know what time you guys see, because I see 8:24 a.m. Eastern. That's the actual time, but I just want to know if that's the delayed time you guys see, or if that's real time. Just let me know the time zone right here and what time you guys see on there. If it's a couple minutes back or it's like right aligned with what I have. Yep. My chat is super delayed. I figured. So okay, so it's 2 minutes delayed. It's delayed by 2 full minutes because you guys are putting 8:24. Now it's 8:26. It's 8:26 here. You guys are putting in 8:24, so it's 2 minutes delayed. I've never had any issues like these. I'm so surprised with everything that's happened today. Okay, so you guys are seeing 8:24. I have it at 8:26. It's 2 minutes delayed. Not really sure why that's happening. That is so strange. Guys, I do apologize. I'm so sorry about everything that's happening. I know how frustrating this experience can be, but I really don't know what's going on. Like, it's never happened this, like, we've had so many live streams in the past. This has never happened. So I do apologize for the experience today. Yeah, it's my chat that's delayed by 3 minutes, 2 or 3 minutes. All right, nonetheless, at least you guys can hear me and see the screen live. I hope that's working. I hope the real time, it's the audio and the video that matters. The chat may be delayed, but that's fine. We'll just catch up on the chat, and I'll answer any questions, and we'll do the technical analysis piece there. But we got about 2 minutes, about a minute and a half left for the inflation data to come out. So I'm going to bring up the report here. So hopefully the audio and the video is real time. Hopefully both of those things are working real time. So this right here is going to be the report. We've got CNBC Live over here, so let's listen on that. as soon as they are live. So I'll refresh this right at 8:30 a.m. So that's going to be 8:30 a.m. Eastern is when they actually come out. Nelson, thank you so much. I really, really appreciate that. Thank you so much. That's interesting. Yeah, I've never had issues like this. I don't know why today is just like everything just gets frozen and my computer just starts to go black all of a sudden. I don't know what's going on. I use a Razer. I use a gaming computer. It's a gaming computer. It's a Razer, and it's super fast. It never lags. You know, I don't know what's happening today. All right, we got about 20 seconds left, and we'll get that data hopefully. Let's see the markets. This is going to be the SPY. This is the QQQs, and here we go. Got about 5 seconds. All right, we're seeing a little bit of a move to the downside for the Nasdaq. The volume is kicking in. SPY is roughly down about 7 basis points. The yields unchanged so far, back over 1.5.
Welcome back to Squawk Box. Rick Santelli with very important breaking news. Our May read on Consumer Price Index. Headline number up 0.6, a little hotter than expected. And if you strip out the all-important food and energy, up 0.7. That's also more than expected. But, and this but's important, I don't see the revisions yet, but until I do, this follows numbers that were even higher last month. All right, here's the Moneyball numbers, year over year, with the base effect in effect, and that number is up 5%, up 5% on CPI year over year headline. How does 5% stack up? The last time we had a number that was higher than 5%, was August of 2008. Strip out the all-important food and energy year over year, up 3.8. Last time we had a number higher than 3.8 was January of 1992. Now let's go over initial jobless claims. 376,000. And of course, this is a very good number because once again, we are now looking at post-COVID lows. And granted, it's not by very much. The previous record was, well, last week at 385, which still could be revised. And if we look at continuing claims, finally, I get to say on live TV that we've made a lower number on continuing claims post-COVID low, because the last couple of times we did that, it was on a revision. It wasn't actually on the week we were talking about. 3.499 million, whisker under 3.5 million. And of course, the previous record was 3.602 from the second week in May. So these are very much numbers that are good for the economy. We know that we could see more hiring, less claims, but there are some sticking points to the reopening. I think the inflation data is very important, but if you notice, interest rates have hardly ticked up. We're at 151 on a 10. We're at 219 on a 30. And I think the base effect is really what traders are paying attention to, which means that the year-over-year comps are a bit distorted by ultra-low rates during the worst part of COVID, and they're starting to take the side of the Fed. This all sounds great to me. But if the Fed isn't correct and the ultimate notion isn't transient, boy, you could see a big move. But for the moment, especially with yesterday's robust 10-year note auction, I totally think that you're not seeing the short presence looking for higher rates in treasuries or any global sovereign that you were just 4 to 6 weeks ago. Andrew, back to you.
Thank you, sir. I'm going to pass it over to Steve Leisman because we want to get his take on all of this. Steve?
Yeah, so let me talk about inflation real quickly. Is Rick still there? Rick has some used cars, and that's understating what Rick has, because Rick has some awesome classic cars. Man, they're going up in value, Rick. Good investment, because automobiles, used cars and trucks up 7.3% on the month of May, after 10% in the prior month. Rick, what do you have? Some old Fords, as I understand it?
Oh, we have a lot of old ones, but the one I've been working on the most, if you could see my fingernails, as a matter of fact, till midnight last night, an old Kennedy-era Lincoln, suicide doors, 67 Continental. And I'll tell you what, it's funny you mention that because it's not only inflation on car prices, used prices, it's also collectibles, it's also lithos, it's also art. What do they all have in common? They're not paper. They're not paper. You could touch them, you could sell them, you could look at them, you could drive them, and that's important.
But let's talk about what's going on, Rick, and I don't want to take it from our fabulous anchors here, but isn't the market trading like this is peak inflation? You look at...
All right, so initial jobless claims a little bit lower. I think 9,000 lower, came in at 360 something thousand, 376,000 versus 300, and that was the expectation here. So let me pull that up very quickly. So, all right, but nonetheless, let's talk about inflation here. I'm gonna quit out of this. I'm gonna pull that up here. So this is the chart for the 12-month CPI, right? That's all items. So you'll notice that we actually went up from 4.2% to almost to 5%. So that's 80 basis point increase, almost double what we were expecting month over month. And of course, we broke down the Federal Reserve's beige book. We are now almost trading the highs of 2008. So almost 13-year highs for the total CPI. Let's take a look at core CPI. That's going to be this. This is the biggest jump that we're seeing. I mean, this is what's really... the core CPI is as high as 3.8% coming in from 3%. So that's a big 80 basis point increase there. Again, twice is what we were expecting. So 40 basis points for both total CPI, core CPI, and we're seeing that jump here. And this is actually trading at a well over 20-year high for the core CPI here when you exclude food and energy. They haven't updated the analysis piece here, so let me see if I can break that down. Consumer price index. Yeah, so they're still showing the month of April here, so they haven't showed the month of May. All right, let's take a look here. So all items, again, 5%, that's going to be this number. And core CPI, when you take all items, that's food and energy, that's going to be 3.8, right? That's going to be this number right here. So those are two numbers that I showed you guys, 3.8 and 5%. But of course, energy, you'll notice, has had the biggest jump, 28%, 54%. Gasoline prices, 56%, 58%. So even if you come over here and you type in gasoline, you'll notice huge jump, 56.2%, right? Year over year. That's the biggest reason why we're seeing core CPI actually go up by a lot. So all items, that's food and energy. That's the reason why we're seeing this core CPI huge jump here, because when you talk about gasoline prices, they're the biggest driver behind this.
As you guys alluded to, used car inflation continued to be quite firm. I think it was up 7.3% month over month. This is a huge increase. That was after 10% last month. That accounted for about a third of the increase in overall inflation for the month. So that is, quite a concentration of the increased inflation into that used car component. And as we know, there's some idiosyncratic issues that are going on in the used car market. Auto supply has been constrained by the lack of semiconductor chips. But in addition to that, we know that rental car companies, which reduced their fleets last year as a result of the pandemic, are really racing to try to build those fleets up ahead of the summer driving season this year. And so they're actually buyers in the used car market where
I think it's mostly because of the supply chain issues that we've had, like the chip shortages. That's what's causing the production of new vehicles to actually move at a decelerating pace. Like you'll notice it was unchanged in the month of February and March for the prices, and went up 50 basis points, 1.6%. And when you compare that with the used vehicles, right, those right there are the two line items that I want you guys to focus on side by side. And you'll notice that used cars are actually going up 7% in the month of May, already coming from a 10% increase in the month of April. So there's more demand for used vehicles as there is for newer vehicles, right? So 29% year-over-year jump for used vehicles versus 3.3% for new vehicles. When you talk about energy commodities, jump over 6.4%, 1.8% in the month of May. And I think that's what's really driving the total CPI to a little bit higher. All right, let's take a look at the market. So again, very muted reaction, down about 33 basis points for the Nasdaq, and SPY is down pretty much flat. But the yields have pushed up. The yields have jumped a little bit over 1.5% right now, and we're back over 1.5%. Let's take a look at some of the stocks here. So Palantir down about 70 basis points. We got Apple that's down 42 basis points. And NEO is down about 0.5%, and Tesla is actually going up over 79 basis points, trading over $603 per share.
Prices that we're seeing now, does it increase inflation expectations? Because that will sort of dictate whether this is transitory or ends up actually being more persistent.
But if you're Jay Powell, you're kind of happy on the lower wage. The lower wages are moving up. That's a good sign for you, right?
Yeah, absolutely. And I think if you're the Biden administration, that's a good sign as well. And by the way, higher wages may or may not actually translate into higher prices. It depends on our businesses. Are they being more productive? And we are actually seeing in the productivity statistics that they are. So that could dampen somewhat. That would increase margins potentially, and that could dampen somewhat the extent to which this is priced on or passed on to consumers. And the other thing is that's been a big deal is that labor's share of broader economic income, right? Labor's share of income has declined secularly over the last, call it 30 to 40 years, and the Biden administration certainly wants to try to reduce those trends toward labor share declines, increase them. Getting wages up at the bottom quartile of the wage distribution is one way to do that. Ultimately, I think that is a good thing.
I don't know if you saw, we talked about it yesterday. Joe, you weren't here to see this. Chipotle said that because wages were going up, that they were going to have to start charging more, 4% more, when you buy a burrito. And I know how much you care about the burrito. But at the same time, Tiffany, wages are going up for the CEO. The CEO's pay, I think, went from $14 million to $38 million. So it's a little bit of a question mark there.
All right, so right now pre-market, the sectors that are moving higher are financials and energy, and tech is actually moved up a little bit pre-market after the inflation data. So a little bit of a miss there. I mean, the consensus again was, let's take a look. So the consensus was consensus was 4.6%, and the range was 4.5 to 4.9%. We actually landed at 5%, and for core CPI was at 3.4%, and between 3.2 and 3.6, we actually came in at 3.8. So a little bit higher than expectations here. From the consensus estimate, but nonetheless we are seeing a bit of a push higher for NEO, for Tesla, for Apple is pushing up pre-market, so we're only down about 17 basis points. Palantir is also up. Let's take a look at Amazon. So we are slightly up in the green here, 9 basis points. NEO is seeing a big move to the upside, now is only down about 7 basis points, trading just under 42.75, and Tesla is at $603 right now. SPY getting a bit of a move here, so up over 15 basis points, now taking over the Nasdaq. And Nasdaq is slightly down about 14 basis points. So a bit of a muted reaction, only because when you look at the details here, used cars is what's really driving inflation, and that's what drove inflation last month as well. Is if you read that report, you'll notice that was the biggest driver for what we saw, right? Other than that, I mean, energy, commodity prices have also moved up quite a bit. So they have already gone up year over year, but when you talk about month over month, 2.1% in fuel oil, that's going to be this, and 7.3% is a big driver for used cars and trucks. And I think that's primarily coming in from the supply chain issues, the chip shortages, and everything else is reasonable, right? You look at apparel, gone up 1.2%, 5.6% year over year. Services, less energy services, is up 40 basis points. Shelter, 30 basis points. Transportation services, 1.5% month over month. So I think that's what the market is pricing in, that it's kind of skewed, or is getting skewed by one line item here, or a couple line items like energy prices and used car sales and trucks. I think that's what the market is expecting, that all the other stuff is kind of reasonably going up, so it's not seeing that price hike in some of those other things. So moving forward, again, going into like the next few months, when you look at the all items, we're right now at 5%, right? And now, like I've said, in the fall, beginning of winter, going into 2022 is what we're going to see potentially kind of like a decelerating pace. And for this all item CPI to start curling back down, right? Curling back down at under 5%, under 4% over the long run, so they can stabilize that rate at 2%. That's the long-term average. That's the long-term target from the Fed. And you look at core CPI, energy prices kind of stabilize a little bit right now. I'll have to break down the OPEC report because that was also released. And what the oil demand and supply looks like, inventory-wise, so on and so forth, then we can get a good handle on the core CPI as well. But I strongly believe that 3.8%, of course, is a 20-year high, is what we have seen. And be prepared for those headlines, right? Those headlines are going to be base effects, jump to over this much level, and core CPI hits a 20-year high, so on and so forth. But over the long term, we'll definitely, in my opinion, most certainly see a kind of like a consolidation, stabilization, going up at a decelerating pace and coming back down. Again, I think it's those line items that the market is pricing in. It's the used cars and some of the gasoline prices and energy prices, and that's why energy and financials are actually moving up, right? So that's why you're seeing energy actually the leading sector right now, 70 basis points, followed by financials because the yields have actually pushed up. So when you look at the yields here, we're now up over 2.5%. So we're up over 1.53%. So two sectors benefiting from this CPI report, of course, energy, financials. Technology has moved up a little bit, but materials, healthcare, we got consumer staples, real estate, all those sectors basically flat or down on the day because material prices are going up, and real estate, when you talk about lumber prices, housing, construction, those are also becoming difficult to actually build. All right, so how will it affect the sectors and trading? I mean, it already is kind of getting priced in. So energy and financials are the ones that are pushing higher, unless this is like a delayed chat once again, if I'm going to be explaining myself again. But it's the line items, right? It's those specific things that the market is pricing in. And it's the used cars and trucks is what another 7% increase month over month, coming in from 10% due to the supply chain issues, the chip shortages. People are going more towards or producing more towards the used vehicle sector as opposed to new vehicles. Because I think I read like a report, there were like Fords and Teslas basically in a parking lot assembled together waiting on parts to actually be complete and start selling those vehicles, right? So I think that's what's holding back on some of the supply is the chip shortages and some of those other factors. That's what's causing used car sales to actually go up month over month. And as demand kind of floods over to used cars, that's what's driving prices higher. All right, let's take a look at AMC stock here. Down about 4.5%. Let's take a look at BlackBerry. So we are down about 4% for BlackBerry as well. Let's take a look at GameStop. So GME is pretty much down about 7.8%. Let me see if I can read some of those comments here, chat. Hopefully this is not delayed. Probably this is delayed. Yeah, this is probably a little bit delayed as well. All right, so nonetheless, to give you guys a very quick breakdown, the core CPI is sitting at 3.8%, a little bit higher than expectations, primarily being driven by energy prices. And what I will be doing later is I will go over the OPEC meeting report, monthly report, and kind of understand oil inventories, demand and supply, to understand when the prices for oil can kind of stabilize. We've also learned from Kathy Wood that she believes both crude and Brent oil will kind of stabilize at $70 to $77 per barrel in the future. One of the things that she pointed out is that back in 2008, we were actually having a demand for close to over 100 million barrels per day. And now that demand is sitting at roughly at 90 to about 92 million barrels per day. So she sees energy prices, more specifically Brent and crude oil, peaking out at close to $70 to $77 per barrel. And in my opinion, of course, we are going to see some headlines for core CPI, 20-year high, base effects going up this much, sitting at 3.8%. Well, there will be a lot of fun in the markets with relative to where we are sitting with inflation. But I strongly believe that we're going to see more of a transitory nature in the future, and we're going to see consolidation, because you can't have prices go up like this, like over the long term. Like, this is not sustainable. Like, when you look at energy prices here, that's energy. So it's gone up 28%. right? 28%. When you bring up gasoline, that thing is up 56% year over year. Like, this is not sustainable in general over the long run. So, even in the past, like back in 2009, you saw gasoline prices go up 53%, but then eventually they actually came back down. Same thing's happening right now. We're hitting almost a 2009 high. So that's going to be like almost an 11-year high for gasoline prices. So we are coming back down for that. And then, of course, all items CPI. So that's going to be total CPI sitting at 5% now, which is going to be some of those levels from 2008, 2009 levels, before we saw a huge drop all the way to negative numbers. So we went into some like of a deflationary side of things. But yeah, I strongly believe we're going to see some deceleration there too. And the market is pricing in the used cars and the trucks is what's the main driver there, because that's what's up over 7.3% month over month, biggest increase that we have seen. So Adam says, my understanding, nothing has changed except used cars. Yes, so that is the big reason why we are seeing inflation go up is used cars and trucks. That's what's skewing the index a little bit to the upside. And energy prices. So two things is really what's driving the inflation here. So overall impact on tech and Nasdaq. Right now we're seeing a bit of a muted impact. SPY is pushing up because energy and financials are pushing up. So this is our... actually, look at that. Look at how financials caught up to energy, right? Like, look at how, as yields moved up, so if I were to remove, like, let's just say that, let's remove the consumer staples, healthcare, materials, this one, and industrials. And let's just keep tech and here. So look at this chart, right? So as the yields moved up from 8:35 a.m., so look at the jump in yields. 8:35 a.m., the report came out and we saw a jump in the 10-year yields. And look what happened to financials, right? Financials actually went up as the yields went up, and they're now one of the leading sectors right now, up over 55 basis points, alongside energy, because oil prices are also moving up a little bit because of what the inflation report came out. So you'll notice this is US oil, this is going to be Brent, trading at, this is going to be actually crude oil, WTI, trading at $70.31 per barrel. This right here is going to be Brent oil, trading at $72.64 per barrel. So energy prices moving up, yields pushing higher, so that's what's driving some of those value sectors once again a little bit higher. So energy and financials up. Tech is pretty much flat on the day, only because we're not seeing inflation kind of being in some of those other sectors like apparel. If you were to check out, let's take a look at some of the other items here. So all right, so this is going to be for the month of May, right? So electricity's kind of been stable at 14 cents per kilowatt hour. These are going to be some of those consumer staple items, like we're looking at grocery lists here. So $3.50 for a gallon of milk, which has gone up a little bit from $3.45 in the month of April, so not really of a huge impact there. So $3.50 for that. Eggs, ground eggs are sitting at $1.63. So these prices have been very seasonal, right? The one thing that you'll notice is ground chuck. I'm not even sure what that is. Has been trending higher. Huge jump in June and then back down. Andrew, what's going on? Thank you so much for joining in. Yields have been coming down. I mean, if you look at the broader trend, yields have been coming down from highs of 1.77. They're down about 17%. But of course, they're bouncing off that support, and of course, with the inflation report that's coming out, we are now up over 2.26% because inflation is up because of used cars and trucks that are selling off. Month over month, they're actually going up for the price. So that's what's causing the yields to go up. And when you take a look at the S&P, that's up over 11 basis points right now, and the Nasdaq is pretty much down about 23. That's what's causing tech and growth names to pull back because the yields are pushing higher because inflation was higher than expected because of used cars and energy. So it's like a ripple effect that we're seeing across the board. You think the day will be red or a green? I think it's going to be somewhat, for the Nasdaq, it could be like a red potential close. But anything that comes out from like the next week, like when we have the PPI data, that's going to be the producer price index. One of the things that I mentioned in my Federal Beige book breakdown was that it doesn't necessarily mean when prices go up, doesn't necessarily mean that consumers are also going to see the price increase. Just because the raw materials prices go up, lumber prices go up, just because input costs goes up for businesses, doesn't mean that consumers like you and I are going to pay increased prices on the final goods at the end, right? Because a lot of businesses, what they're doing is they're absorbing all those costs, those increases, because they want to keep up with the demand and they don't want to shy away the buyers. When you increase prices, you're going to have limited demand for that product. So what they're doing is they're absorbing all those margins, which is obviously reducing their margins, but they're absorbing all that increased cost because they believe that that's going to be that's not going to be sustainable over the long term. So that's what we're seeing in China, right? China's inflation numbers also came in higher, but I was looking at an interview from Iris and Bloomberg, and she mentioned. Let me see if I can pull that up. Just give me 1 second. All right, so this was the article that I was reading. So you'll notice that China's factory inflation at 2008 high adds to global pressures. So producer prices rose 9% in May, fueled by commodity boom. And so far, Chinese manufacturers are absorbing higher costs. So what does that mean? That actually means that manufacturers, businesses, companies, they're absorbing all the cost that is increasing on the raw materials input side, and they're not passing that over to customers. So the producer price index climbed 9% in May from a year earlier, driven by prices for oil, metals, chemicals. The National Bureau of Statistics said Wednesday the median forecast in a Bloomberg Economist survey was 8.5% increase, came in at 9%. Consumer inflation increased only 1.3% from a year ago. So reading further, you'll notice that so far manufacturers are absorbing higher costs rather than passing them on to customers. It is impossible to pass on the cost to consumers, even in an overseas market. Producers have to eat up these costs. Iris Peng, who's the chief economist of Greater China at ING Bank, and she basically says that have scope to absorb price increases and shield downstream producers, she added. So I think that's what's going to happen potentially in the U.S. to some extent, and that's what we're reading from districts as well, that they're not passing on the prices to regular consumers. So lumber and used cars will crash after supply chains get back to normal. Yeah, I mean, I do believe that they're going to consolidate and come down a little bit because those prices are not... yeah, I don't know what that ground check is. I'll have to probably Google it and see what that is. But all right, so the yield's up over 2%. SPY is pushing higher over 14, and the Nasdaq is still down. Look at the yields go. And energy and financials, of course, pushing higher with tech flat, consumer discretionary flat. And let's bring up some of the other sectors: industrials, materials, consumer staples, healthcare. They're all pretty much flat across the board, as there are no changes. And look at NEO. Look at NEO stock. It's up over 44 basis points. It's trading shy of $43. And Apple is down about 16. Tesla is up over 67 basis points. Amazon is down about 13 basis points. NEO had a catalyst that we broke down earlier. They are already constructing their second manufacturing plant. So I think that could be like a specific catalyst drive here, momentum for NEO. All right, let's break down some of those momentum stocks, right? So looking at the 1 hour, 4 hour chart for GameStop, you'll notice that we are validating that 21 EMA. What do you guys think? Are we going to hold up? Are we going to hold up over that 21 EMA here? So 3 times we kind of validated that level. And even in the past, this right here, perfect validation, and we're just on this consistent uptrend. One thing I do want to point out is that we're going up on what? What is it that you guys can notice right now for the RSI and the price itself for GameStop? Because we're definitely pushing higher, and we have pushed up, right? We have basically rallied a little bit over 143% coming in from May 11th. But what is one thing that you guys can notice from GameStop's price action and the relative strength index? Man, is this really delayed chat here? So I'll have to wait for you guys to answer. It's so hard that I can't even converse with you guys right now because of the chat being so delayed. So Ryan says, seems like the data is not affecting the market. Yes, it is. It is affecting specific markets. So it's affecting like energy and financials, and of course as the yields go up. So those are sectors that are pushing higher pre-market, and other sectors are basically flat on the day so far pre-market. Oh my god, what did I do?